Wonderful Monday, good afternoon, and a wonderful week to all. Please give me some okay that you can hear me, that you can see the screen. Drop me some yes or Y or anything in the chat, and then we can begin. Where's that? Here we are. Beautiful, perfect. Thank you very much. So I hope you enjoyed your weekend and you are ready for another exciting trading week. So before we start, did I close it? Oh. Ay. Where is that? Here. Okay. Good. So before we start, two main things here, guys. For sorry, all those of you who watch us for the first time, inside the members area of the Traders Academy Club, make sure to watch the video tour that explains how to use everything you have inside the members area in your favor. And this is the trading report that includes all the most important webinars right here to understand the terms we use in our trading, a video that explains how to use the trading report. Generally speaking, you have a watch list and you have a comment section. The watch list is basically the place where you just hit the button on any single time frame you would like. It opens the chart for you, explaining what do we have here. Okay, so just go here and you will see everything you need. Now, this report is a summary to what's discussed in the live trading rooms. So you will find here basically everything summarized. And this is a bit deeper explanation with the terms and the explanation about every single time frame. So let's begin. Let me just move it here then to the other screen so it does not interrupt us. And we can start going. Just move here. Okay. Pairs by pairs. So the European are the first pairs on the list. Let's start with the euro dollar. Our view is bullish, and this is what we are trading. So what we have on the euro dollar is a triple descending cycle on the weekly time frame with a bullish divergence connecting the lows of the triple cycle and the verification from the daily time frame as well. We got here a triple descending cycle by itself, then convergence, now bullish hidden divergence. So our idea is that this was the first cycle and this is expected to be the second cycle. For that to start and happen, we wanted to see the 4-hour chart turning bullish as well. So it did have a divergence. It was holding the psychological level of 110. It cleaned this clearance area and now turning up to create the convergence and higher highs. Moreover, it starts to build here higher highs, higher lows pattern, which is technically a bullish sign, and for us the plan was and remains bullish. So we expect that to continue higher. Our invalidation stays the most recent low, because if for whatever the reason is, the market changes its direction, break below that, which sits by the way on, as you can see, on 61.8. So if we suddenly go and break here through, it's a warning sign to all the bullish view. Okay, that's why our current scenario is pretty clear to the upside. Now, another thing we do need to pay attention to, a little concern from the 4-hour chart. It could suggest here a structure of 3 lower highs, 3 lower lows. If that turns to be some sort of double wave and breaks below this trend line, now I don't say it will, I just say this is something we have to remember. If the market develops like that, this would be a warning sign as well, because the lower highs, lower lows with two waves correction stands for trending correction pattern, right? Trending continuation pattern. So that would basically be a possibility of first leg and then second leg to develop. In that case, we would have to step back. As for now, we are far away from that. That's why our expectations are bullish and invalidation is right here. That's the euro dollar. Just want to mention and remind you, if on any stage you have any question about anything I explain, please write it down and I will be more than happy to explain that again. The next one on our list is the euro versus the pound. We are still bearish. What do we trade here? The triple cycle from the weekly time frame with a massive extreme coming right from the top as well. Our expectations for the corrective cycle 1, 2. Right now, what is happening here that daily is developing triple descending cycle and a bullish divergence. And the way I see that, the next several days, we would basically stabilize here a low, ideally below these lows. I do expect some sort of a fight around the psychological zone of 0.85, and I do think that this divergence that should be created here would cause us on the next several weeks some good buy opportunities. Meanwhile, there are no turning signs. We do not have false breakouts followed by convergences. We do not have higher highs, higher lows. Therefore, no bullish signs yet, despite the divergence, right? It looks like, but it's a big divergence, so it has to be a buy, right? Well, it was a divergence here and here and here and here, every single stage divergence. Divergence, I want you to remember that. It's only a sign that something is building up in terms of these differences between the demand and the supply. Okay, when will that start to make the move? This could be said only by the price, not the indicators. Indicators give you the hint, show you something is going on. Something is likely to happen, and we are likely to see some reversal to the upside. But do we have the signs for that the market is ready to make it happen? No. And why I say that? Because many traders choose the simple way, right? Looking just for one thing without confirmations, and then say simply, oh, there is divergence, it has to retrace. No, it doesn't. Divergence is one sign that something is happening. Exactly like a potential pattern that develops, right? Exactly like a potential trendline breakout or potential lower low, lower highs. It's a potential for something to happen. Okay, and I want you to remember that. So we do want to see these divergences, and they are building up, but we also mainly want to see the say of the market, and the say of the market that things are ready and lined up to happen on the price action, on the chart. Okay, you probably heard these terms, right? Everywhere, price action, price action, price. It's impressive term, but it simply means the way the price behaves on the chart, and you do want to see it makes the turns. So that's for the euro pound. We remain bearish meanwhile until it creates the turnarounds for us, or at least until we have two time frames ticking the divergence. As you can see, the MACD currently still bearish slope. right? Ideally, we want to see here a new low and then tick to the upside and on moving average also. Then we can discuss about reversals and look for the signs on the chart. That's for the euro versus the pound. Our next European pair is the euro franc. The way we covered that previous week was that likely we are going to the 100 level. The reason for that was that the daily chart gave us here lower, 3 lower highs, 3 lower lows, and the 2-wave structure which tries to break through. So so far it's holding, but we cannot deny that the price went below the trend line of the pattern. It's not just a trend line, it's a trend line of the pattern, the ABCD correction. So the idea is sell the rallies, and this idea remains on as long as we hold the 61.8 Fibonacci of this move. Why is that so? Because if we assume this is the first leg of what should become the next possible developing cycle, we don't want to go above the 61.8 of its leg, right? And if it is the first leg, then it has to be trending structure on the lower time frame, and this is basically exactly what it gives us: lower highs, lower lows. So our idea is looking for the sell as long as we respect and don't go above the 61.8 and hold above that. Our view is bearish, looking for sell setups. Okay, and the last one of the European pairs is the euro versus the Australian. So we are trading the weekly cycle, expecting dip to waves or any sort of a range, but this or other way around, sell the rallies is our plan. Previous week, we got this move completed as a cycle by itself on the 4-hour chart. Now we are facing corrections and expecting that to continue lower. So basically, the daily chart here, it's kind of suspicious with this 3 waves and a bullish divergence. So basically, the idea is corrections and sells again once the daily fit in weekly again. So we could see here a bearish hidden divergence on the next few days. That could turn to be just some sort of a pattern as well. But the idea for us is looking for the sells. The 4-hour chart currently developing this structure. It switches from, take a look, this was a bearish trend, right? Lower highs, lower lows, 2 waves correction, bearish hidden divergence, which now switches to continuing. And we will want to see the price going below here, starting to make the move down. Now there is one thing that, again, it's too early to judge or too early to say this is how it's going to be developing, because there is no price movement, so we can't really know that. But one of the scenarios we need to keep in mind is this, and that if this turns to be now 3 higher highs, 3 higher lows, then there is a chance that this is the first daily leg, then second, and only then we go down. How will the market choose to develop? We don't know. We can't know. There are not enough instruments available for that. So we do expect here, ideally on this clearance zone, right? Turn around. And will that be just 2 waves, or will that begin a new trend? Time will tell. But if it does give us 2 waves correction and then break this trend line, that would be a sign, exactly like explained before, that we are going for bigger 2 waves. Okay, it's not there yet, so we don't know how the market would choose to move. That's why I always say we trade facts. As for now, the facts are look for the sells. A break below this trend line should be this fact, and then we will follow to see how it behaves. Okay, so our plan was and remains bearish. By the way, if it will make the visit of this clearing zone, then we can squeeze to lower time frame, as it might go and make a complete cycle here, as you can see, right? Complete double cycle or even triple cycle with the bearish divergence. And then we will be able to squeeze to the 1 hour chart and start to see here for false breakouts and convergences for better sell opportunities. Again, it's early. We will see that on the next days, but it's definitely something to remember. And meanwhile, and until then, as long as the market does not provide us better read or better risk reward rates, we are following this trend line. So break below should be good bearish sign. Before I move to the pounds, and we have 3 of them for this week, as for now, any questions about anything of the euro pairs? If yes, please write it down now. EuroCAD. Why didn't I cover EuroCAD? Pardon, Verislav. Thank you very much. I have it on my list and for some reason not covered. Thank you. EuroCAD, we are bullish. Here is why. The triple descending cycle from the weekly with this divergence. We expect a corrective cycle, meaning this or any sort of a range, but we are after buys. Daily fit in with this divergence and false breakout. Now building up to higher highs, to higher lows, so we expect continuation. For that to happen, the 4-hour chart had to fit in, and 4-hour chart, which gave us this leg, now gave us bullish hidden divergence. We were looking for bullish return, and we got it here with 3 higher highs, 3 higher lows, which brings it back to bullish trend, and our expectations are to the upside. Once again, Verislav, thank you. I really I missed this one. I have it here in front of my eyes and forgot to cover. So thank you very much for that. Our invalidation for that, guys, by the way, is always 61.8. Straight retrace. If we are going straight below 61.8, it's a game over. Why? Because we do have the bullish pattern here, right? 3 higher highs, 3 higher lows, fitting in higher time frame cycles, right? So basically what could happen here is any corrective cycle. It could be 2 waves, it could be sort of a range and breakout. Anything is welcome, just not one straight move. One straight move in trending conditions below all Fibonacci levels basically means that there is no correction, and the market is not impressed with the higher high, higher lows. That will be a warning sign for us, okay? So remember this one. Perfect, that's the EuroCAD. Now we are into the pounds, and we have 3 this week. So first of all, I would like to start with the one that we followed from previous week. Previous week, there was a pound dollar on the list where we wanted to sell if we break below this trend line here. That was our expected setup. If we break below, we expect the move down all the way to this expansion. Our invalidation was break above the falling trend line, because that brings this scenario again, triple double and breakout. So it was invalidated, no sell, no buy. Basically, it does give us the buy opportunity, but I choose a different pound to be more interesting, and I will cover them in a minute. So the pound dollar is removed from our list, and we have 3 direct pounds to follow. Pound New Zealandian, first of all, which we still trade this pattern, expecting that to make a new high with a new divergence. No signs against on a daily 4-hour chart. Got this trend line breakout, was holding us this low with, again here, breakout, retest, deep retest, but was holding and still bullish. We don't have anything against, and now we are trying to rebuild here the higher highs, higher lows. So the view of the pound kiwi was and will remain expecting a bullish continuation by looking for buy setups, buy retraces. If you are involved already, and we had a very nice breakout since the morning here with this. What am I drawing here? We got these 3 higher highs, 3 higher lows, and then the breakout come in play with this little bullish hidden divergence, and it's going on. Now it's a bit expanding triple, right? So something like that is building up. So yeah, corrections are still welcome, and we do expect continuations. That's the pound kiwi. The next one, pound yen, a new addition on our list. What do we have with this pair? According to the weekly, it's sort of, well, it's actually monthly, but you can see it also on the weekly. Bullish divergence, bullish pressure. We are developing a bearish hidden divergence right now, but for that to happen, daily would have to verify. And as we can see right now on a daily still does not verify divergence. There is no divergence here, in here, and nothing yet here. So also, if we follow the weekly trend line, there is still room to go higher. Plus, that might be just the beginning of the first leg to the upside, right? We still don't know to say if it will because we don't have enough price movement, but there is a good chance this is just the first leg of something massive to come. Watching on a daily, as I said before, we do not have any signs against, so the expectations are to continue further. This is a bullish developing cycle. When we put the Fibonacci's levels here, that's what we figure out. The 160-180 is far away, and there is good chance we continue there. Why is that so? Well, it's here. Sorry. Why is that so? Because we do have high, high, high. 3 higher highs, 3 higher lows. Now, on the 4-hour chart, when we go lower, this is a bullish structure by itself here, right? Triple descending structure, but higher highs, higher lows in play. And then we got this sort of unknown. I know many say it's symmetrical triangle. I can't argue with that because I'm not really, patterns, it's not my field. Technically, it definitely looks like a triple. It's this symmetric triangle, but I dislike it because it's just like in one candle. Everything happens within one candle. So that's why I kind of dislike it. I cannot, argue here because it's correct to be symmetrical. Personally, I dislike it because of, it's when the whole price of like a full month happen within one candle range, it sort of loses reliability. But we cannot deny the breakout of this range with gaining momentum. Now, if it is gaining momentum, then we definitely want to see bullish structure again, right? Bullish pattern, evidence for a bullish trend. And when we go lower, we definitely see that. Higher highs, higher lows in play. So our expectations buy retraces, as simple as that. We do want to be careful here. Let's remove that, because if we suddenly, let's remove that 1-hour chart here. If we suddenly go below 61.8 of this structure again, right? Like boom, down one leg, this would be a warning sign. That means that the market is not impressed by the attempt of the buyers to create a new bullish trend, right? And that would be a very serious warning sign. So as long as we hold this 61.8 level and we don't hold below, our view is buy setups. We are also developing a bullish hidden divergence here, so it will be good to watch for reversals, right? And potential further continuation. And the last one of the pounds coming in play and in the list, not yet to trade, mainly as a watch list, is the pound versus the Canadian. This is the cycle I plan to trade. And I say I plan to trade and I don't trade yet because we do not have facts to trade yet. So we have here a massive special cycle and a massive magnet zone. We have clearance area here, and we do have what I call a bank zone, which, sorry, where is my rectangle? Here. This is the area. As you can see here, big candle, inner candle, and strong breakout, which was never retested before. So I believe that the closer we get here, the stronger the sells would be. Bearish divergence is developing, bearish trend line when we connect the falling highs, and of course bearish hidden divergence to support from a weekly time frame. When we connect these highs, this is a bearish hidden divergence, and this is a bearish hidden divergence. Now, I don't claim we are going for a new low, no, but this is a place where I do expect a bearish pressure and deep correction. We also are moving here in sort of bend-to-bend movement, well, with the zigzag, but bend-to-bend movement, and we are fighting around that 200 moving average, falling moving average, with a we can't argue with this bearish slope on the weekly chart. So from my point of view, this is the critical zone, and as I said before, we don't yet have the setup here, but we definitely have it following up. It could happen in a day or in a week. We don't know, but we definitely know we follow up for a setup. What kind of setup we would like to see here? 2 false breakouts and convergence, right? Then sell the rallies would be fantastic. 2 false breakouts and then trendline breakout also would be fantastic. And of course, the most recent one, the alternative one, is the lower highs, lower lows, and the sell the rallies. Basically, trend change, right? Trend is created by lower highs, lower lows. That's how bearish trend is defined. So, as I said before, it's there, it's building up, it's not yet a trade, but the levels and the way that the price is combined on the higher time frame definitely require from us to bring it in. When will that be triggered? Tomorrow, 2 days, a week or two? We can't know. But we are next to the critical zone, and we definitely want it to be on the list, because once it hits, it hits. So that's from the pound. Add to that the euro pound, which we discussed before. We get a very nice list to work with. All right, next ones. The New Zealandian pairs and the Australian pairs. So the Australian dollar is the first one. What do we have with this pair? Double cycle. Of course, we can go and do it like a triple here as well. Pardon, a drawing. Like a triple cycle with the bullish divergence between the first and the last low. Daily time frame to support its divergence as well. We have the higher highs. We don't have convergence, but with that we do have the turnaround in the higher highs here. So we expect corrective cycle. Corrective cycle could be 1, 2, or corrective cycle could be a range. Which will that be? We don't know, but we do know once the drops happen, we are after the buys. Why are we after the buys? Because the daily also, if we expect the weekly to be corrective, then the daily already has a bullish trend structure, bullish pattern here with the 3 higher highs, 3 higher lows, right, on a daily time frame. So buy retraces, buy retraces is, no, what do I press here? Here. Buy retraces is our plan, and this is what we follow up. We have 2 options here, right? First of all, a new low, some bullish divergence. It could be also double bottom, of course. Bullish divergence and buys. The last one is the break of this trend line, because if this is our pattern that we discussed before, right? Then what do we follow here? The waves correction and a breakout for continuation. If that happens, we do want to make sure it's 3 higher highs, 3 higher lows. Oops, again bad drawing, and then we can discuss about buy retraces. So we do want to break above the falling trend line. We do want to create a structure of the higher highs, higher lows for a bullish trend. And if it happens, beautiful. We are after the buys. Okay. Now, can we be more aggressive here and say, okay, if it will form this 3 higher highs, 3 higher lows, and give us 2 waves correction, can we buy here? Well, yes, it will be a bit more aggressive because we don't yet like going above the falling highs, but fine. It's if it happens, we will adjust. As for now, we don't have that. The 1 hour shows potential, and again, we would follow up to see if it's formed this way, perfect. If not, we are not rushing. One thing is clear for us, we are after the buys of the Australian dollar to make 2 waves, or if it decides to go lower, then we will be after the buys from the bottom of the range. It doesn't change nothing, just the timing that we will be involved. And the next one on the list, Australian versus the Kiwi. Before that, we had the Aussie franc that we traded previous week. Target reached. Right now, neutral. No clear read on the next cycle. Target reached of this double cycle, game over. And the Australian versus the Kiwi, which invalidated our buy plan by breaking below this trend line. Basically, what happens here is we have here a triple cycle, and we expect a corrective cycle in 2 waves or a range. This or other way around, the pressure is yet bearish after 1 straight move. Weekly last divergence ticking also bearish, and of course the 4-hour chart, no signs for the end here, right? No ending divergence on this drop, so the view here is bearish, expecting that to continue lower. New Zealandians, we have the New Zealandian dollar, or as the guys fixed me today in the Telegram group, New Zealand dollar, not New Zealandian. So New Zealand dollar. What do we have with this one? Triple cycle from the weekly and the, and the bullish divergence here, of course, and the expectations of corrective cycle. If that's the case, daily has to build up the cycles in each of the weekly legs. We got the first one, we got the drop, we got a bullish hidden divergence, and we are expecting continuation to the upside. New Zealand CAD. I'll have to practice my announcement with this pair. Triple cycle as well from the weekly triple descending cycle, bullish divergence on the moving averages. Daily is the one that creates for us higher highs, higher lows. Buy retraces is the plan. So the assumption here, this is the first weekly leg that comes, just a second to draw, comes in a play, different color here, comes in the play, and we would expect another leg from the weekly, which will be cycled by itself on the daily. That's the two New Zealand pairs we have in the play, and the dollar yen. We were riding the sells here previous week, triple descending cycle. We expect corrective cycle. This did not change. Previous week we got a beautiful first drop, then correction. Now I was watching carefully this trend line, but what turns here, we tried to break and never managed to hold, which turns to be a false breakout. In such case, it still fits in the structure of 3 lower highs, 3 lower lows, right? This likely is the first leg. This is the correction, and we expect the second leg. So the dollar yen is yet bearish for us. Also broke this rising trend line, and we expect further continuation. Okay, that's with the dollar versus the yen. And this is what we have on the forex part. There are a few more I follow. Dollar franc, for example. I shared this view in the Telegram group. I think yesterday night. I think so, yeah. You would find the charts there. Basically, what I want to say is the low being created here with this divergence, and inside the range, the bottom of the range, and the 4-hour chart to fit in. So basically to do this. And then we will be watching for buys. Until then, it's mainly on the watch list, nothing special to be done. Now, the other markets, the gold, our view of the gold, looking for sells corrective to the 50% of the cycle. Watch out that currently we finally got here the 3 lower highs, 3 lower lows, so we want to sell the rallies. Rallies could be in 2 waves. Rallies could be up until bearish hidden divergence would come in play for a few days. And the 4-hour chart is the one that has to make it happen. So the 4-hour chart builds here the structure. We want to see this coming and basically break below the rising trend line followed by the bearish divergence should be a good sign for a bearish continuation. Okay, previous week we went bullish with the 1-hour chart false breakouts and the trend line breakout, so we expected corrective cycle to come in play. It happens, it pays, so that's pretty much it. Okay, so that's for the gold, and this is the only one of the most popular commodities. Oil, we went neutral previous week when we got the triple cycle bearish divergence and the 4-hour went into divergence. So we say that's all for now. And we have the sugar running. This is what we trade on the sugar, just a reminder. So we expect the second leg. Daily fits in beautifully by making lower highs, higher highs, higher lows, 2 waves retrace and a bullish hidden divergence. The trend line was breaking and we are bullish since. 4-hour chart was the last one, basically, to verify it here, right? And we are bullish since then. And definitely pay attention to the sugar as the daily starts to show divergence coming up, and once the 4-hour chart also has its divergence, actually it already has divergence. This is a good partial cash out in case you still didn't, right? Daily and 4-hour chart here have the bearish sign, the bearish divergences, 2 out of the 3 time frames have it, partial cash out in play. And the reason it's only partial because the weekly still have the massive possible target in this cycle, and none of the daily and the 4-hour chart really have warning sign in terms of lower highs, lower lows, or trendline breakouts. Nothing like that. So that's why there is no need to fully cash out in such scenarios, where the risk reward is definitely in our favor for the long term. Move stop loss to break even, yes. We don't want to wake up to randomness, right? So stop loss to break even definitely is a good way to free the risk. But we don't want to miss the opportunity of a fly if happens with the weekly cycle. And stocks and cryptos. So we have the BMW, which we are looking to trade. BMW, where did it disappear? The German, here we go. So BMW, we have, you can also see that in the report, right? We have the weekly bullish divergence, bullish convergence in a massive cycle here, and of course, the most recent one. So the way we wanted to work with that, since the daily is making higher highs, higher lows, is buy retraces. So that is our plan. Now, the one that we've been involved for a while, buyer, we are buying from here. Great run, and now we need to go for a cash out because now it's a completed cycle. Triple cycle in play with the bearish divergence on the moving averages, bearish divergence developing on the weekly cycle itself, weekly time frame, right? And this is on the cycle time frame. That's where it's a big warning now. So buyer, game over. We finish with our buys. We have another one that we have on the watch list. This is the So General of here. The idea here is the same like the BMW, massive cycle, bullish divergence, most recent trend line broken. This is the pattern we have on the lower time frame, so we assume this is the first leg of a big correction, and our plan, exactly like with the BMW, by retraces. Okay, and as per the cryptos, nothing really changed, just want to follow up. We have our Ethereum versus the Bitcoin running on this pattern, 3 higher highs, 3 higher lows with 2 waves correction and a breakout, our expectations further. And we have the Ethereum versus the dollar, which currently does nothing besides being annoying. All the higher time frame cycle are still lined up, and this is the one we still trade. So the expectations are further. Definitely we will need to pay attention to how it develops, because as you can see, currently we stuck here. But if we will start to build up here lower highs, lower lows, for example, it would be a game over for the bullish view. Until then, the view was and remains bullish. And this is very slow 4-hour chart. No, it's not. It's not. As you can see, that's why I just marked it here. You see, the Ethereum dollar. Well, this is what probably you refer to, right? But don't forget they are just inner. The whole movement comes from the bigger swings, right? So all that is the inner count. As long as we hold it, it affects on nothing. I mean this pattern. We always want to work with the official swings of the waves we work with, right? And if we assume this is the first, this is the way that the daily is structuring, for example, right? We have to respect the official highs we work with, okay? Thank you very much for being here today, guys. Vladislav, thank you once again for the EuroCAD. You saved me from missing a great opportunity, which we have on our list anyway. So. Thank you guys for being here. I wish you a fantastic week. Please note that tomorrow it's me again. Jordan is away until Wednesday, okay? So he will be with you from Wednesday. And tomorrow I will see you once again. Trading report will be published as soon as it's completed and ready for you. I already have half of it done, but have still a few little things to complete there, and we'll publish. And that's all. I'll see you in the Telegram group. Thank you very much for being here. I wish you a wonderful day and week ahead. Ciao for now.